Captains of Industry, brought to you by Airtel.
Kenya Commercial Bank is regarded as the oldest bank in East Africa. It's said to be the largest bank in terms of net worth and assets, and also done a lot in terms of expanding on its branch network into the rest of the East African sub-region. Initially regarded as a loss-making state entity, KCB is now a self-sufficient, a viable and highly visible commercial bank. Experts credit all of this to the visionary and dynamic leadership of Martin Oduor-Otieno. He's also a philanthropist through his work on the SOS Children's Village. Our captain of industry today is the CEO of Kenya Commercial Bank, Martin Oduor-Otieno, and I thank you very much for joining us on CNBC today. 5 years after you joined KCB, you're now at the helm of the bank. How has the world changed for you in the past 5 years?
Well, the world has changed dramatically. As you know, KCB is the largest bank in this region, and to be at the helm of the largest institution obviously comes with its joys and pains, and certainly we've seen KCB transform dramatically over the last 5 years. You know, from a purely Kenyan bank to today a strong regional institution in 5 countries in Eastern Africa, and with a vision to be a Pan-African bank, you know, more and more countries in the future. So over the last 5 years, real transformation, but the journey has just started.
The vision to be a Pan-African bank, a lot of African institutions are starting to embrace that philosophy. Why is the time right?
The time is really right because, you know, for a long time Africa was seen as almost the forgotten continent, and everything that we heard about Africa was the negative vibes coming out, you know, wars and poverty and disease and all that kind of thing. You know, what has happened recently is a realization that actually the potential in Africa is so great, and that you know, there's a lot more that can be done on the continent, and certainly to begin to address some of those challenges that I've mentioned, that Africans themselves and African institutions must take up this challenge and run with it. And therefore you see that a number of institutions are now branching out. We see a lot of Southern Africa institutions, you know, coming up north. We see a lot of Western Africa institutions coming east, you know, northern institutions, and everybody else. And, you know, in a sense, East Africa has been left behind in this whole journey that that people are embarking on. And so, you know, KCB has taken a leadership role here, certainly in setting out the vision, in setting out the strategy, in beginning to think about how this will happen, because it will not happen overnight, and therefore there's the whole thought process that has got to go with this. So this is where we are.
Regional integration is definitely a definitive marker of the world we live in, and we've seen the coming into fore of the East African Protocol, the opening and synergizing of markets within East Africa. Certainly that must provide you with a platform on which to grow this Pan-African vision, but what are the challenges?
Well, the challenges are, you know, are quite wide actually, you know, because you're moving from the known to the unknown in a sense, and you're beginning to deal with different political dynamics, different legislative you know, environments and dynamics. You're dealing with economies who are previously closed and are opening up. You have the challenge of resources, skills, which is one of the greatest things that you know, in driving a business, one has got to always take care of, that you've got the right people working for you, can deliver the right kind of results that you're looking for. So the challenges are all there. It's really around, you know, marshalling these resources that you need to be able to drive that vision.
I mean, you talk about the challenges also being about identifying people who fit into the ethos of KCB, and that speaks to some of the difficulties that the bank has encountered in the recent past, moving from state ownership, restructuring, major retrenchments, further growth and recovery of the balance sheet. Talk us through those challenging times at KCB and the lessons you've learned, because I think a lot of African institutions right now, particularly parastatals, are grappling with that, how to become independent of the government.
KCB has been around for more than a century now, you know, more than 100 years. It was not always called KCB. It's gone through different times. In the mid-70s, that's when the Kenyan government, you know, took over the bank as 100% ownership. And over the years, the ownership has come down to what today is just under 18% government ownership of this bank. Now, each of these phases has had its own challenges. It's had its successes and not so successful times. What we've seen is that in the era of government ownership, the bureaucracy was much more entrenched, and governments gave directions and gave orders and determined how the institution will be run. Governments made appointments of boards, made appointments of chief executives, almost made appointments of key staff in the organization. And therefore, their allegiance was owed more to the appointing authority in government than to running the institution as an institution. Over the last sort of 10 years or so, that has changed to an extent where, with the whittling down of government shareholding, that the other shareholders have begun to come out much more strongly and to enforce their rights. And therefore, at the annual general meetings, they come up, they talk openly about the way they want to see their bank being run or the institution being run. They participate in the elections, and given that their vote now counts much more than the government vote, it means that they can influence who sits on the board, who runs the institution, and what policies the institution adopt. So one of the lessons really is that, as the old saying, he who pays the piper, he calls the tune. Less government institution means that more and more private sector type orientation is being built into the institutions, and this is what we've seen over the last couple of years in this bank. And because of that, we've seen that although government still continues to play a key part, because in every country, governments are a key mover of the economy. And so for us as a bank, which is a large retail bank with branches all over the country and all over the region, governments are a key customer of ours, and therefore they participate in our bank as a customer and in a small way as a shareholder.
Okay, you mentioned a shift in mindset. Now, beyond the government and the need to corporatize the institution, is a broader conversation in Africa about shareholder activism and Africans really seizing the reins in terms of where they invest, how they invest, and making sure that corporates are part of the social dynamic in Africa. As you expand and you deal with investors in different environments, what do you make of this whole concept of an African shareholder and the activism of the African shareholder?
Well, shareholders globally have become much more active. I mean, people want to know that if they invest their money, that A, this money is going to be well looked after, B, it's going to deliver returns that are commensurate with the risk that they're taking in putting their money there, and also that the returns are going to be better than what they would get elsewhere, in terms of this investment. And so as we run the business across East Africa, we're seeing, within Kenya, people are looking at greater returns. They're comparing us with other institutions and the returns that those are delivering. The annual general meetings which we hold are much more active. People are looking even beyond the economics. They're looking at our participation in the community social arena. What we are doing for the community, so that so that they don't just see us as people going into communities to get out something, but that we are putting back something in those communities. When I look at the other 4 countries where we operate outside Kenya, the same is true, that people in Tanzania, in Uganda, in Southern Sudan, and in Rwanda are saying, what are you doing for our countries? What's KCB doing here? And again, our social corporate social responsibility programs are very strong there. Governments are looking to us to deliver something. When I go into these countries and I say, we want to invest here in new investment, one of the first questions that governors of central banks in those countries ask me is, okay, Martin, what's going to be different? We have other banks here, so what is KCB bringing here? And we've got to demonstrate that we've got some value add to those economies that we are bringing forward. So the shareholders and all the other stakeholders in those countries are looking to some value being driven by KCB.
All right, you're also trying to value add through your technological investments. Clearly, you need to be more technologically astute in the 21st century, and banks have started to leapfrog some of the innovations we're seeing. You've invested heavily in VSAT, in the so-called MCR, intelligent ATM that does currency transfers. How does that give you a competitive edge?
It does, because what's happening these days is people are looking for convenience, people are looking for accessibility. People don't want to go out to the bank and queue for ages like they used to do previously. So what technology is enabling us to do is to provide that service without too much pain for the customer. It's also enabling us to reach many more customers than we could have reached through brick and mortar. And so what we are seeing is the ATMs have enabled customers to come in any time of the day or night to do their transactions. The mobile phones have enabled customers, to do whatever they want to do. Internet banking is doing that as well. And so all these, and this is just the beginning, actually. I think what we're going to see as we go forward is a situation where technology is actually driving banks, to the ultimate. And it's great. From our perspective, it enables us to reach more and more customers and potential customers. From a customer's perspective, it creates that convenience and access. It also enables us to be more productive, reduce our costs of reaching this customer base. So that is, and of course, as you know, within the region, there are other channels which are emerging, like agent banking, where, rather than not necessarily putting up a big bank, but using already existing outlets, you can provide banking services. And this is going to develop as we go forward.
Now, we're living in the so-called post-credit crisis environment, and although Africa was largely immune to some of the shocks we saw internationally, the Basel III regulations and a lot of the regulatory elements are starting to filter through in terms of governance in Africa. The banks in Kenya and certainly in the rest of the continent are seen as those institutions that will catalyze investment and growth. Going forward, what do you see for KCB?
Well, you see, one of the things, the unique things about banks is banks are businesses which are run on the basis of trust. People give us money because they believe, and they know that we look after that money and give it back to them when they need it back with some return on it. What we've seen in the post-crisis era is that the call for greater governance and transparency in the way institutions do their business is now at the fore. Risk management is becoming one area of great focus, whether from the regulatory perspective or internally within the institutions themselves. And so, banks are mobilizing to ensure that, they are positioned to take account of the lessons learned from the crisis, to move their businesses forward and to catalyze the growth in financial services. Because one of the other things which is a fact is that the financial services industry drives economic growth. They provide access to capital for people to invest and for them to make a return. And it's a circular thing, they get money, they invest it, they save, they grow their businesses, bank business grows as well. And so, with strong institutions, you expect that the economies will grow much faster.
Well, banks as engines for growth, especially in emerging markets, we're getting the views of Martin Oduor-Otieno, the CEO of Kenya Commercial Bank, the largest bank by assets and net worth in East Africa.